US Federal Reserve Building, followed by visuals of grocery stores, gas stations, and a stock ticker turning green. After 2 years of painful interest rate hikes, the Federal Reserve is finally prepared to reserve course. With inflation cooling faster than expected, the Fed is now widely expected to cut rates in September, potentially making a major turning point for the US economy, the job market, and everyday Americans. Inflation cools more than expected. Line graphs showing US inflation falling, clips of shoppers' grocery receipts. The latest consumer price index report shows inflation has dropped to just 2.4% year over year, the lowest level since early 2021. Core inflation, which includes food and energy, also declined more than economists had forecast, suggesting price pressures are easing across the board from housing to healthcare to used cars. CPI inflation, July 2025, 2.4%, Fed targets 2.0%. Fed Chair Jerome Powell said that we are seeing encouraging sign. Inflation is coming down and we are getting closer to our target. The Fed's new tone. Powell speaking at a press conference followed by analysts on CNBC. At its July policy meeting, the Fed held interest rates steady, but what really grabbed attention was the shift in tone. For the first time in months, official signals that rate cut is on the table for stable in if current trade continues. Several Fed governors echoed that sentiment, suggesting the central bank is now more concerned with over tightening than underreacting. We want to avoid unnecessary damage to the labor market, and one governor said that a clear signal the Fed sees room to ease up. What it means for you: mortgage application office, credit cards bills, home listings, car dealerships. So what does this mean for American households? Mortgage rates currently hovering near 6.8% could finally start falling, boosting the house market. Credit cards and auto loan rates may easy slightly, offer relief to consumer carrying debt. And for investors, Wall Street is sharing the Fed's new tone. S&P 500 hits new record high, Nasdaq surges. The stock market surged following the Fed's comment, with tech stocks and home builders leading the surge. Risks and outlook. Headlines warning about economic risk, clips of empty office buildings, labor protesters. But there's a still risk. The Fed is walking a tightrope, trying to bring inflation to its 2.0% target without causing a recession. And some economists warn that cutting rates too soon could reignite price pressures, especially if energy prices spike or especially supply chains falter again. Others argue that the real concern is now the labor market cooling too quickly, with job openings down and wage growth slowly. If inflation data for August confirms the trend and job growth remains stable, markets believe a September cut is all but certain. After years of rate hikes and high borrowing costs, the economic tide may finally be turning. The big question is now, can the Fed pull off a soft landing, or is more turbulence ahead? Rate cut watch. Will the Fed deliver in September? Subscribe for the latest on inflation, interest rates, and the US economy.